We've got Licia Leslie with Option Pit. She's a former market maker and member of the Chicago Board Options Exchange. She's currently the director of trading at optionpit.com. And the Option Pit method specializes in efficient use of capital, position structure, and risk management to help their clients make profitable trades. We love Leslie. She's our Licia. I think I just tried to combine Licia and Leslie into one word. I think my brain is starting to go. We love Licia. She's our gal pal. We had fun doing the CBOE events with her in Chicago and getting to do a mock trading session on the trading floor, and it was a blast.
Fun time. Yep.
So she's going to talk today about shopping for cheap options, how to use options to go shopping, designer shopping, that's my kind of shopping, learn a simple trick that will make trading options easy, and why trading options can support your family for life. So we're very excited to have Licia here. And we'll just get her unmuted and get her to share her screen and let her.
Hi, guys.
Hi.
How are you?
Licia, hi, how are you?
Nice to meet you virtually, Raleigh.
Yes, absolutely.
Not just emails. How are you two? I haven't seen you in so long.
We're good. It's good to see your face. It's been too long.
Good to see you guys. Okay. I start sharing my screen, I assume.
Yes, ma'am. And we're here if you get stranded, so we're not going anywhere.
Thank you. Here we go. I'm good. You can see my screen?
Yep,
Got it.
You're good to go.
Awesome. Awesome. Thank you. My name is Licia Leslie, and I'm here to teach you how to shop for cheap options. We're going to find calls and puts on sale. We're going to find us some good deals. Quick disclosure, this is for education and information purposes only. Options do have risk, and anything we talk about is not to be considered an investment advice or trading advice. One little mini disclosure, and Pat, if you need to, you can stop me, but in my presentation, there may be a couple little bad words. I will give you a warning, so you can cover your ears if people don't like to hear that, but I'm sorry, there's a couple of bad words. I'm just warning you. I will give you a warning.
Just be you.
Thanks, Nikki.
No, I'll be shocked. I never say bad words.
Never.
Never.
Great. It'll be fun then. So I grew up on the southwest side of Chicago near Midway Airport. My mom was a nurse and my dad was a cop. And my dad being a cop, we constantly had battles in our household about curfew and those kinds of things. And they were a little stricter than everyone else's parents. So when I went away to college at Northern Illinois University, let's just say I had a good time. And I had such a good time that they asked me to leave. I was booted out of Northern. Not the finest school, but so I came home. My parents were like, okay, you just wasted $6,000 of hours. You can pay for your own college. And imagine that $6,000. I wish it was that now. That you can pay for your own college. So I came home, I went to junior college, and I worked at Shell gas station. I worked at Giant Auto Supply. I graduated with honors from the junior college. And then I transferred to Loyola University down on Michigan Avenue where their business school was. At the time, my dad was working security at the CBOE, and he's like, let me get you get you in there for the fractions tests and see if you can't work there. I passed the fractions test and I started as an entry-level position at the CBOE as a price reporter. It was grunt work, but it was a lot of fun to be on the trading floor. From the price reporting position, I moved up to an order book official clerk, which was basically the clerk that worked with the trader that represented the CBOE that traded the retail orders that came in. And as an order book official clerk, I was standing directly across from facing a trading crowd. And that's when I realized I would like to be a market maker. I want to be a trader down here. And I procured a job with a market maker. He hired myself and another guy, and we worked with him for a year. I remember once while he was in Mexico on vacation, he had a position in McDonald's. He was along 3,300 at the money calls. And as you option traders know, that's a ton of gamma. So I had to scalp literally 10,000 shares of stock back and forth. Well, it made him a ton of money while he was laying on the beach in Mexico. He returns and we're there for a year, and he decides to put the other guy on a seat and passes me over. So I stayed with him for a couple of months longer, and then I realized he isn't going to ever back me. I took a job with another market maker, and with him, I worked off the floor. I traded little 1x3 put spreads. I'd be long one put and short three puts, which caught us in the mini crash of 1989. We'd gotten hurt by that and lost quite a bit of money. After that, I felt like I could never touch an option. I could never trade again. So I left for a while and traveled around literally hanging signs in banks. We had cement drillers and tool belts and drove a truck and all that stuff. So it was really fun. But I knew I had to get a real job. So I came back to the CBOE and again clerked for a market maker, and you had to put your year in before they were going to back you. My last market maker was Ernie Nadich, who was a wonderful man who he helped a lot of people. I'm sorry. He helped a lot of people. He gave a lot of young people opportunity. Great man. Sorry, I wasn't expecting that. So this was 1992. Back then it was about $50,000 to open an account, a trading account, and become a market maker in a pit. I chose the Citigroup pit, and they were famous for being just big jerks and hard to break into. They had a really good thing going. They didn't want to share what they had, what was going on in their pit with anyone. So they made sure no one else ever broke into their pit. When I started, there were about 16 guys. Half of them are missing in this picture. They probably didn't want to be there. It was lunchtime or something. This was probably about 1999. But I started in 92. My first day, I was standing there filling out my card, my trading card, and one of the guys walked up to me nose to nose, and this is where you cover your ears. Get the f out of here, you will never trade here. And of course I'm shaking, my hands are shaking. I squeak out, yes I am. And all day, every day, harassment. You know, the guy in front of me, go away, go away. He was the worst out of all of them. I think by my second week, I was first. So meaning that when a broker walks in with an order, he'll call out the option he's looking for a market in, and the market makers all yell out, raise their hands and give their market. Whichever market maker is first, the broker determines, and that market maker has the right to either the full order, part of the order, or he says split it up. And generally they split it up because they're all comfortable with each other and they just share it. So by my second week, I was first on a 200 lot time spread, I remember, and I took the whole thing. Well, they just about had a heart attack, and that started a huge war down with us. You know, it was always back and forth, back and forth. One way they tried to eliminate me was when they were first, the guy would take the whole trade and then later on redistribute it with the rest of the crowd secretly, which was totally illegal, but they were doing it. And I would get phone calls in the pit from just strangers on the floor saying, you know, F those guys, hang in there, you know, you can do it. They're redistributing, you need to report them, you know, that kind of thing. But I didn't want to report them. I wanted to be a market maker, and I couldn't cry, couldn't do any of that. So I battled with them for probably over a year, which most people, most men, probably they get hassled for, you know, 3 to 6 months. But little did they realize they were making me a better market maker, a better trader. I had to be faster than them. I had to be better. I had to put up with them at the same time I'm trying to trade. So in the end, they made me a much better market maker. So that was back then. We didn't have handheld computers. We didn't have any computers. Everything was done manually. We kept track of our trades on cards, and we kept track of volatility in our head. We knew options which were cheap, which were expensive. You just knew your stuff from being down there all day, every day. And it was great. We didn't have computers. Eventually, computers did make it to the trading floor, just like they do in every other industry. And they changed the landscape greatly. With a computer, everyone has the answer to the question, right? Everyone knows what the volatility is. So it narrowed our profitability margins. That, along with what we call the DPM system, which is when the CBOE literally handed out trading pits to large market maker groups and giving them 40% of the orders that came in. Every order that came in, the DPM took 40% of it. So that was helping squeeze out the individual market maker. Then the New York Stock Exchange decides to trade from fractions, which the stocks traded in eighths, and they decide to trade in decimals. So stocks are now trading in pennies. So of course, options had to start trading in pennies. And that further diminished our profitability. And of course, there was always payment for order flow. These large market making groups all paid for these retail trading orders. And as an individual, you just couldn't keep up with that. It was great. You were your own boss. You're trading your own money, but you didn't really have enough money to keep up with the big guys. So a lot of these factors were changing the industry drastically. And by June of 2003, it was kind of like people were realizing these things were changing. Do you get a job with a larger group? You had to find a new way. Well, luckily for me, I was 6 months pregnant. And no one knew because I wore a huge, big trading jacket. But when I told the guys in the pit that I'm 6 months pregnant, I'm going to be leaving, cover your ears again, one of the guys was like, I wish I could leave this place and be 6 months pregnant. So that just goes to show you how much it had changed. So I decided to leave altogether and raise my family, raise my son. So I left the trading floor as a professional market maker or professional trader, and now I'm back to trading, and I'm a retail trader, trading off my computer. So using a computer to my advantage in this way. And as you can see from these headlines, retail traders are considered dumb money. We're Muppets that the sharks eat up. And they just think that we're not smart enough to make money down there. And they fight each other and battle each other for our orders, right? Our dumb money orders that they think they're going to make a lot of money on. And I just want to show this. Citadel is now controlling 41% of all retail trading, which I don't feel so bad. I wasn't the only one that was kind of squeezed out. If he's trading 41%, then there are a lot of market maker groups that were squeezed out. Okay, enough about me. Let's go shopping so we can really go shopping. I mean, like designer shopping, like Nikki said. This I just love. I wish I could wear it, but I had to put it on there because I just love it. Okay, first trade I'm going to show you is in First Solar. It's a solar company that is in the TAN ETF, which is a basket of solar companies that has been on a tear. So I think First Solar is going to go higher. This is Friday's graph. I put these spreads on Friday. The stock is the stock is trading 67.24 here. Now, the first thing I look at when I want to shop for cheap options is I like to compare the implied volatility of the options with the historical volatility of the stock. I like to find situations where the historical volatility of the stock is higher than the implied volatility of the options. In that, I'm thinking the options are going to catch up with the movement of the stock. So we're looking at two volatilities. We're looking at the implied volatility of the option against the historical volatility of the stock. And First Solar, the stock volatility is 56.32. And the implied volatility of the options is a bit less at 55.61. So that was a good setup. I think I need to move. Can you see this? Do I need to move that? Is that better? Then I like to look at the option chain. Like I said, this was Friday, stock was 67.38. I would like I'm thinking the stock is going higher, so I want to look at a call option that's just out of the money. The no 72 half calls are trading a 58.25 implied volatility. And you can see as we go further out of the money, the 77s, the 82 halves, 87 halves, 90, all the way to the 95 halves, you can see this implied volatility ticking higher. So this 72 half call may be a bit more expensive. Here it's trading $384. And the 95s are $69.75. Dollar-wise, these are more expensive and these are less expensive, but implied volatility-wise, these 72 halves are much cheaper than these 95s. There's a almost 7-point difference in the implied volatility between the two options. So we're going to set up a spread with that. We're going to buy the 72 half calls and pay $3.90. And we're going to sell the 87 calls at $1.20, taking advantage of that discrepancy in those implied volatilities. This is a 15-point spread, and we actually have, on Friday, there were 50 days left before it expired. So that's, in my opinion, a very good deal. It's on sale. Well, on Monday, the stock traded up $4.33 to $71.71. Our spread had gone from $2.70 to $3.80, and that's a $1.10 profit, which is a 40% winner in one day. The fact that it was only in one day, I decided you got to take that money. If you're making 40% in one day, you have to take that money. But and of course on Wednesday the stock had traded up to 78, and the spread went to 6.30. But if you're winning, like I say, if you made that much that quickly, you can take half of it off. You can leave a couple spreads on if you think it's going to run further, which First Solar did. It actually traded 81, so it went $10 higher. So we were right on the stock. My next example is Penn Gaming. This stock had traded $4 in March. I should say my next trade. It's an actual trade I had on. Friday it traded 72.75. This stock I like to, this stock I was thinking on Friday, it needs a pullback. It literally came from $4 in March. It's had this massive, huge run up. I'm looking for the stock to go lower. So I'm going to find some cheap put options. Let's find some cheap put options on sale. We start out again, we look at the implied volatility of the options, and here they're 85.27. And the historical volatility of the stock is 86.85. So we have a 1.5 there difference. And like I said, we're thinking that these options haven't quite caught up to this movement of the stock. So we're going to find them on sale. We're going to take the puts just out of the money, stock 72.75. The 65 puts are just out of the money, trading an 89 vol. And you can see the volatility is going higher again as the further we go out of the money with these puts. Also, that shows interest in these options. The fact that the volatility is going higher, that means people are buying those. We like to buy the low one, $89, and sell the higher, 89 volatility, and sell the higher at a 95.5 volatility. So our spread will look like this. We're going to buy the no 65, well, we did buy the no 65 puts at 5.70, and we sold the 50 puts at $1.50. This is a 15-point spread with 50 days to go on Friday. Today, For Penn stock, traded down from 72.75 to 64.5, and our spread went up to 570, which was 35% winner. I still have it on though. I think the stock could go a little bit lower. And for today, I have a spread idea for you in silver. SLV-ISHARES, which is the ETF that tracks physical gold, physical silver, the price of physical silver. Silver and gold a lot of times are bought when there's a lot of uncertainty, and I think everyone can agree with this election coming up, there's going to be, and there is a lot of uncertainty. So I'm thinking silver can trade higher from here. So I would like to shop for some cheap calls in silver. I start out looking at the implied volatility of the options is 42.35, and the historical vol of the underlying is 49.75. We have a really good wide gap there between the two. And I'm thinking these implied vol options is going to catch up to these this historical vol of where the stock has been trading. And we look at our option chain. Stock is trading 22.13. And the NOV 22 calls are slightly in the money, but I like those with a 43.25 implied vol. We go further out of the money and we see the volatility going up again. And our NOV 26 calls here are 48 implied volatility. So we can buy a 43 and sell a 48. I like that. That means we're getting it on sale and we're getting a good deal. So the 22s we pay $1.40 and we sell the 26s at 36 cents. Overall, super cheap spread. I mean, I know it's $22 stock, but super cheap spread, $1.04, 4-point wide spread, and we have 44 days to go. And it's already 16 cents in the money. This is a spread I looked at today. I like it, and I put it on today, and it's a spread I would like to leave you with an idea. And I would also like you to sign up for my new newsletter. It'll be coming out weekly with some fun chatter and a new trade idea every week. It's called Profits and Pumps. And it's called that because the guy in front of me that always said, go away, was taller than I was. And I had to wear pumps every day, or heels, just to be able to see over him. So Profits and Pumps. We can please sign up for that. And thank you. Thank you for joining me. I know we're all thirsty. Let's have some wine. Is anyone still there?
Yeah, we're here. That's some wine.
Yeah.
So actually, we're probably going to go through some of the Q&As with you. I know it's always nerve-wracking to try to time these things, but we've got, a good 20.
I'm sure I just flew through that. I apologize. I was.
A little bit of nerves, right? I know.
Yes.
So George and James, if you can try to catch up with Raleigh, he is probably already on top of some of the questions. I know Mark was in here, so thank you, Mr. Mark Sebastian.
Sure, I can. This is Raleigh here. I can tell you this, Licia, most of the comments are vindictives against the people that bullied you. I mean, the response was like everything from, well, people would have to cover their ears significantly to sue their asses. And truly, what an incredible story.
Yeah, it was crazy. You have to remember it was 92. It was before before a lot of Me Too. They never heard of Me Too or anything like that. And like I said, though, it absolutely made me a better trader. And I loved it down there. I had the best time. I made a lot of money and it was awesome.
And it's interesting. You are just a media star here. People want to know more about, tell us about your life after 2003 when you left to have children. What happened then? Did you take a hiatus or did you have your baby and jump right back into trading?
That's funny that you ask. I thought I would use the other side of my brain. And of course, my son was a year old and I'm twiddling my thumbs. I thought I would use the other side of my brain and I went to interior design school.
And I bet you that nursery looked great, right?
Oh, yeah, right. Well, I went at night, actually. So I was home with my son all day, and I went 4 nights a week. My husband's awesome. He loved just being with Grant at night. And yeah, it took me 4 years to do that. And I had a great time. And of course, when I tried to start my own interior design business, it was 2008. That didn't work out so well.
Oh, what a year that was.
So I tried that for a little while. Then 2010 through 2014, I traded commodity futures.
Okay.
While my son was at school, it was perfect because, they ended at 1:15.
Certainly. So you
that
made
was
that
fun.
complete transition from the floor to trading at home, commodity futures on your computer.
Yes.
How did you
And-
find that?
Well, just connections with my old office. My old office manager is a great friend of mine, and she was working in a commodities trader's office, and she's like, come down and try it. So I have the technical analysis from that. I had to teach myself technical analysis, which I wasn't doing as an options trader at the CBOE.
Sure.
And so I have a little bit of everything there. Yeah, and then I hooked up with Option Pit through Ann also, through my friend Ann also. I met Mark.
Outstanding. Now Mark's moved. He's in Austin now, isn't he?
He is. He
That's
just
where I
left.
am. That's where I am as well. So
Oh,
welcome.
wow.
Yeah, welcome Mark to Austin. From Chicago to Austin, he's going to appreciate the winter here much more, I guarantee you.
Yeah, Pat already threatened him and said, you're in driving distance of me now. So
But there are some questions that have popped up here too that get back to your trading technique. For example, a couple of questions here. I'll read the quote. I do 100 trades a week for same week or 1 week out. I have never used implied volatility. Where do I find that?
Any platform, any good I'm sure every platform has it. You can find it on your chart. You pull up your chart of your stock, and you'll be able to find your implied volatility and historical volatility of the stock.
Sure.
I'm sure every platform has it.
And there was
And
kind of a
each
follow-up.
individual,
Yeah.
don't forget each individual option has its own implied volatility.
Sure, and there was a follow-up point that they made. She said, really, here's what I do. I sell naked puts and calls all week long for 3 to 5 day expiration, mostly on earnings days.
Wow, very good. And that's quite a risky, I would say, a little bit of a risk trade, isn't it, with earnings?
Yes.
Some high volatilities, though, that's you're selling, I'm sure, going into earnings.
And no, the comeback was no, I hedge.
Oh, okay, there you go.
There you
Of course.
go. Another question came in from Meg. Do you only trade spreads, not single buys or call puts?
No. If a call's cheap enough, $2 or less, you can just buy the call or put outright. But if you can find a higher implied vol further away out of the money, why not make your spread cheaper? And $15 on, you can make $15 on the spread. That's pretty good. So yeah, yes, you can do that too.
Okay. Eric wrote in, he said, Licia, can you go over implied volatility versus historic volume again?
Yes. The historic volatility is what the stock has been doing. It's the movement of the stock. So that gives the measurement of where the stock has been going, what it's been doing. The implied volatility of each option is it's combination of following the stock, but it's also a combination of the interest in that option. Are people buying it? Are people selling it? Those higher implied volatilities of those options that were out of the money, that shows that people like those. They're buying them. They either think the stock's going higher or lower. Not every option chain is going to set up that way. That's what I like to try to find when I'm looking for a spread, though. Not always are the out of the money's higher than that at the money or just out of the money. You'll find that sometimes they're lower. They're smashed down. I hope that answers your question.
Let me see. Keith says, what chart system were you using? What platform do you use?
I'm using Charles Schwab.
There you go, Chuck. A lot of compliments on your presentation, Licia,
Oh,
going
wow,
down here.
thanks.
Seriously. So question here, how do I find the low volatility stocks? How to find the low volatility stock is the direct quote.
I think most platforms, you can punch that in and they'll give you, I know Thinkorswim does that. They'll give you the high volatilities and the low volatilities. That isn't, I want to say, just so you're not confused, that isn't what I was looking for. Buying options in a low volatility stock, your option will just decay if the stock isn't moving. You know, those options, they lose a little bit every day the closer they get to expiration. So I in my opinion, you want to buy options that are in a more volatile stock for probably a bit more money, but at least you have some action and you have a chance of becoming in the money and making money on your purchase. A low volatility stock could just sit there and your option will just decay and you're just eating it. And
Yeah, excellent point.
you want action.
More questions that are coming in here. Here's two that are virtually the same, which is several people have said, hey, Licia, what do you use to decide which way the stock will go?
That's the question. I'm sure you learned a ton with these other trading women. I try to read the chart. Like I said, I'm self-taught chart reader from my days as trading futures. I like to read the chart. You know, you can see little things like breakouts, and I would recommend reading technical analysis book.
Sure. So technical analysis indicators you use, that's what, as you said, many of the other presenters before have been talking about those techniques.
Yes, there's so many ways.
There's this character called Mark Sebastian who says, he
What's
says,
he
how do
saying?
you pick your strikes? You know?
Is that what he said?
That's what he said.
Mark knows. He's just trying to put me on the spot here, and it's not a hard question, Mark. I like to go a little bit out of the money. Actually, the silver trade I just recommended, though, it's a bit in the money, but it's a $22 stock. So I just like to go a few dollars out of the money, like the 40-ish, 40, 35, 40 delta option, call or put.
There you
Whichever
go.
one has the best value, the lowest implied volatility, right?
I'm sure he's taking careful notes here.
I told him a few things since I started with him, Raleigh. Mark.
Another question comes in. Do you like trading VXX options?
Actually, Option Pit trades a ton of VXX options. I concentrate on the equities because we already have Andrew and Mark with the volatility stuff. So Option Pit, that's all they do, the volatility ETFs. Well, we do equities also, but yeah, I leave that to them. I like equities better.
Okay. TS writes in, is IV the same as Vega?
It is not. It is not. Actually, they're related though. Implied volatility is the measure of where the option is, the movement of the option. Vega is the measurement of the change in the volatility. There's so many Greeks, so.
There are.
Vega measures the change in the volatility.
So this is kind of interesting because you addressed this question earlier, but still more people had come in. Where exactly on the chart is IV? Isn't that interesting?
Yeah.
Do you have one you could pull up? I don't want to put you on the spot there.
No, sure. I can pull up my trusty Charles Schwab. Here's AXP. And I have my studies over here. And it gives me the options, you know, all your stochastics, relative strength, RSI, you know, your moving average, your SAR, all kinds of, and I'm sure every platform has this. Mm-hmm. So I add the implied vol average, and I add the historical of the stock in a different color. Right there. American Express has 36.85 on the options and a 34.75 on the historical.
There
on
you
stock.
go. So folks, you might, depending on what platform you're using, you might just have to search around a little bit, but I agree with Licia. It should be built into virtually any platform that you have the ability to do that. You don't have to calculate it. It should be automatically done for you.
For sure. And your option chain will for sure have each individual applied vol of each option.
Okay. So Peter says, so how do you pick the strike for the other side of the spread?
Well, I like to determine how far I think the stock is going higher, right? So I'm taking an option that's a little bit out of the money, and I'd like to find the most expensive implied volatility wise, not dollar wise, to sell against my long option. You don't want to sell a quarter. You know, you're not going to sell anything for 25 cents because usually when they get down that low, you're buying them in. You want to sell something with some meat to it and something that makes sense. And on my first solar trade, it was $15 wide on a $72 stock. On Penn Gaming, same idea, $15 wide, $68 stock. But in silver, a $22 stock, I like the $4 wide spread because higher priced stocks trade bigger ranges, right? That was hard to get out.
I was going to say terrific command of one syllable words there. That was terrific. Okay, folks, we still have a little bit more time here. If you've got some more questions, either about Licia's trading style or her personal life.
Apparently they're very interested.
Yeah.
I must have just ran through that presentation.
Oh,
I hope people...
you did, but I mean, once again, you covered a lot of great ground. Questions coming here. Do you still trade commodities and futures?
I do not. I do not.
Okay.
I did it for 4 years. It was fun.
That was fun. Let's see here. How long do you hold your spreads usually?
Well, I try not to take if they go my way, like the first solar trade went 40% in one day, like I say, you take that money, you have to always take your money. Otherwise it'll turn around on you and next thing you know, you gave it away. And that's with any trading, everybody knows that. I don't like to take too big of a loss. If it's down 30%, I don't want to hang on to it. I don't want to, let it go to zero and lose that money. I try to be disciplined and take it off at a 30% loss. So it depends what the stock does, I guess, right?
Mm-hmm.
To how long I hold it. But I like to go out a little bit. I like the 45, 50 days out. I like the regular expiring options also better. I mean, weeklies are good, they're there. I always tend to be drawn to the regular expirations though. They usually have more liquidity.
Let me see. We've got a lurker here that says, can we rock down to Pulaski Avenue?
That is Mark Sebastian.
That is Sebastian, nailed it.
So when I for some reason, I always worked in male dominated industries. It's so weird. And I have a friend, she's like, you have more testosterone than any woman I know, So I worked at Shell, I worked at Giant Auto, and then the CBOE. And, that was it. And of course, Option Pit now. I don't know, ladies, and I don't mean to be rude or I better not say it, but when I worked at Giant Auto, it was on Pulaski Avenue on the southwest side. And that song, Electric Avenue, was popular. And we used to sing, we're going to rock down to Pulaski Avenue. And Mark loves to sing that still.
Now we know what song to do for you for your next intro.
Yeah, exactly. Let's see some more questions coming in here. How many contracts do you trade in a typical month?
Oh, it just varies. It varies. I don't know. I don't know. I have to, sorry, I have to look. I'm all over the place. Sometimes quite a few, sometimes not as many, because I'm preoccupied with something else or, you know,
Sure.
over at Option Pit.
Got you covered. George says, do you normally use vertical spread or diagonal spreads?
I like both. I like both. Time spreads. Verticals are easier. I thought I would go with an easier topic.
Okay. Priya says, how do you scan for tickers?
How do I scan for tickers?
How do you, pick the options or the stocks that you want to evaluate?
I just look at stocks that I just have a bunch of stocks on my screen, and that's a good question though, because in our pro chat and for Option Pit, people are throwing out these stocks that I don't even know what they are anymore. These, these new biopharmaceutical stocks and all that. So I get ideas from there.
And by the way, Licia, that's a question that's come up for virtually every presenter that's been here, is that do they have a favorite, basket of stocks or a favorite market that they like to trade? Or are they basically going, look, we're looking for the stocks that are moving, or those that are overbought or oversold, or which have the best implied volatility, or something along those lines. And so
exactly,
that's where this question is coming from, I think.
Exactly. I get a lot of great ideas from our pro chat at Option Pit, and just bouncing it off with Andrew and Mark.
Well, that's risky.
Yeah, I don't know if I'd listen to you.
Yeah, I was going to say. Anyway, so let's say, folks, we got about just a few more minutes here. We do have a great session coming up at 5 o'clock. We've got presenters that are coming in here. We've got past presenters that are coming in, because we have a Women in Wealth roundtable that's going to go on. Licia, you're going to be a part of that. You just stay here with us.
I'm
and
ready.
I think 8, you're already ready. I think
I'm
7 or
ready.
8 of the other women will be joining us as well. So we don't have a hard, fast time around that, but we just want to make sure you have the opportunity to fully, talk about yourself. And at this point in time, several people are going, this is great. How do I follow you? How do I join? What do I need to do?
So I have a new newsletter coming out weekly. I believe, I'll drop the link and to sign up for it.
Let me check the moderators. Don't we have that link
should
on
have it.
file?
Yes, I think the link's already been posted there. That's the options.optionpit.com/profits and pumps.
In the chat, it's there.
It's
It's
in
in
there.
the
Great,
chat.
thanks.
Yeah.
So what all does that mean? What do they get?
They get to listen to me talk. No, no, I'm gonna be writing some fun stuff, try to make it more fun. And I feel like we have so many people analyzing the markets and events, and I don't generally try to do that or guess what's happening, or this causes that and the stimulus is gonna, I don't try to do all that. I just try to look at the individual stock and the trade and what I can see in there. So I promise not to be all analytical like that. I don't think I know how. So I think it's going to be more fun, and I'll have a trade idea every week, and it's free. The best part.
Wow, that's terrific. Hey, while I was just talking here, Jennifer pops in and says, on your earlier point about vertical and diagonal spreads, why are vertical spreads easier?
Well, you're just dealing with one term structure. You're just dealing with the same expiration, for one thing. I just think they're easier to explain and understand in a presentation.
Okay. Let's see here. Well, okay, folks. Once again, you have Licia here, one-on-one. Doesn't get any better than this.
Oh, gosh.
Several questions coming here about recordings. Yes. Hey, folks, every one of the presentations, including Licia's, is being recorded. And our plan is to have send you each, everybody that's registered for this webinar series is going to get an email from us on this weekend. Our target is Saturday. And so you'll have a link to all of that. Because there's been so much great information. I mean, it's almost like drinking from a fire hose. And I know that as a moderator, I've been sitting here making notes, and it's just kind of I'm just going to sit back and listen, you know, because we're going to be able to do this. Okay. And so we have more and more people coming in.
I apologize, Raleigh, if you have to put an extra disclaimer on there.
Okay, there's the camera. Audio settings.
We are going to we're going to put some kind of a rating on it. They're going to look back to the videos, and they're going to see this one that's R rated, and that'll get the most amount of views. Okay.
Hopefully.
But yeah, I mean, to that point, and to everybody that's here, there's so much valuable information that's here. And we have a really great way of hosting that. Each one of the presentations will be separated out from the others, so you'll be able to take a look at each one individually. All the special offer links are going to be there as well, and it will be on the Westmark Trading site in perpetuity. So from that perspective, once again, you're going to have everything that you need. We see that we have wonderful people coming into the room here. Licia, you have a bunch of, it's the ladies' locker room. This is what we've got here. It's wonderful.
I like it.
Well, you know what, I think. Yeah, on that note, Raleigh,
yes.
I wanted to point out too, we've got Westmark Trading has a YouTube channel and also a Facebook channel where we post previous past month's events. So if you're new to Westmark and this is your first time, check out our YouTube page and Facebook page, and there's a ton of trading education on there. So we've got lots of places.
Yeah, so we're going to be putting information out, you know, every place we can. There's no doubt about that. So let's see here.
I hear the wine opener.
So let's see here. I want to view.
We are getting close to quiz time. So were we going to do one now and then one at the end?
Yeah, I think that's exactly what we're going to do. So once again, Licia, thank you so much. I'm going to grab your screen here for a minute.
For sure. Thank you for having me.
Oh, man, delightful, delightful. Absolutely. And let me grab this screen here.
Drink wine. Apparently I can't open it.
Well, I can open it.
Okay.
So there we go, folks. Licia Leslie with the Option Pit, terrific, fun presentation. And her special offer is for Profits and Pumps. That's her newsletter designed for women ready to change their lives. Got to like that. No experience in investing stocks or options are needed, and learn a low-risk way to make money safely and consistently in the markets. You just go to options.optionpit.com/profits and pumps. That's also been posted in the chat panel, so easy to click on that and take you where you need. And with that here, as we get ready for our next event at the top of the hour, we're going to have a quiz.
Someone has to open the wine since I can't, so that's me. For quiz time, $100 Amazon gift card. Everyone knows the drill now, and we're going to do this at the end, maybe in the middle of our Wine with Women, our informal Ask the Experts panel. So Riley, let's get that first quiz up there. What actress invented the spread spectrum technology? Not only do I not know, I do not know what that is.
I don't either.
It sounds very ominous. What famous actress invented spread spectrum technology?
Is that a trading thing?
I don't know.
It's a women and wealth thing.
Oh, there you go.
Heavens. Yeah, we're definitely Googling that. It's taken a while. All right. Let us see.
Do we have a winner yet?
Red Spectrum Trading. You know which actress that is, guys? Yeah, I've got my lifeline behind me here.
Paul
No.
Oh, okay, that's why we were confused. The guys are telling me who's online, and I know Lisa Leslie's here. No, Leslie is the winner.
We do have a winner. All right. And the answer is...
Hedy Lamarr. Okay.
Oh, I was going to say that, but I thought, wow, that's really going back in time.
Yeah. And it's interesting because when I was, ladies, I'm sort of responsible for these questions, but I was doing the research on this, and apparently she emigrated to the United States, I believe, from Austria, potentially Germany, but I think Austria, and obviously a famous actress. But at that point in time, there was a lot of challenge trying to track Nazi military movements because they kept on changing their communication signals. So this was a technique that basically followed those signals to spread spectrum technology. And it's used today in Wi-Fi applications. So it's still in use. And that was Hedy Lamarr.